Welcome back to the garage. If you're new, welcome to the only place where the markets don't get sanitized before they hit your ears. If you've been riding with us, you already know nights like this don't open with a whisper. They kick the door off the hinges. Bitcoin didn't just drift lower. It fell straight through 101 like someone yanked the bolts out of the floor. The House finally moved to end the shutdown. 40-plus days of political chokehold snapped in a single vote. The SEC chair stepped up and dropped a plan to drag crypto and TradFi into the same modern rulebook. Exemptions, clarity, a real pathway instead of constant threats. And TradFi? They're still partying like it's 1999, clinking glasses in DC and New York, while the charts are window diving and on-chain data is screaming that something huge is moving under the surface. That's the surface story. That's what the headlines will say tomorrow once they wake up and pretend they saw it coming. But you and I both know that's not why you're here tonight. You're here for the real question. Did XXX Christian, the man who hunts in the smoke, manage to pull anything out of the trench while Bitcoin was breaking bones and the rest of the market lost its nerve? I asked him. He gave me that half-tired, half-dangerous grin and said it wasn't easy, but yes. And then he followed it with, "We'll give it all to you tonight. But before we rip the hood off those plays, do me one favor. Smash that like, hit that follow, and share this with your fellow degenerates, because we're building this channel one click at a time. Our YouTube just hit a garage milestone, 40,000 subscribers, and we're not doing that with sponsors, algos, or fake hype. We're doing it with raw truth and a crew that actually gives a damn. All right, the stage is set. Bitcoin's on the floor. The shutdown is ending. Regulators are sharpening pencils instead of knives. And somewhere in that chaos, opportunity is hiding. Let's talk about what really happened out there today. You can always tell when a market is lying by how it reacts to pain. Bitcoin breaking under 101 wasn't just a red candle. It was a confession. That's a level people pretend is just another number until it snaps. And then suddenly, you can hear keyboards stop, rooms go quiet, and that little voice in the back of every trader's head asking, "Am I the one about to get harvested?" The fall took the traction with it. You could feel it in the depth. Bids vanishing, spreads widening, slippage kicking like a mule. It felt like hitting a corner at full speed and realizing halfway through the tires are bald. The road didn't change, your grip did. Ethereum, meanwhile, didn't act brave. It acted stubborn. Price living in that 3 to 3-4 zone, refusing to fully break down. Not because the chart looked pretty, but because every time it sagged, heavy hands showed up. That isn't retail. That's big money stepping in like a bouncer, grabbing trouble by the throat and quietly escorting it off the premises. Solana looked like a race car with a warning light blinking on the dash. Fast when it wanted to be, cautious when it didn't. There were moments it looked ready to rip faces off, followed immediately by moments where it clearly remembered what a 50% drawdown feels like. That's not conviction yet. That's muscle memory. Now stocks acted like they were in a different movie. While Bitcoin was testing the trapdoor, the S&P sat there like it was being held up by strings you're not supposed to see. Nearly half the index trading above the 50-day, almost 60% above the 200-day. Not euphoric, not broken, just suspended. Fear and greed in equities parked in fear, not panic, but not joy. Crypto fear and greed straight through extreme fear just days ago. That's the split personality of this tape. Wall Street pretending everything's stable, crypto living like it's strapped to the hood of the car during a crash test. Under the hood, the machine is changing direction. The Treasury's general account refilled to around 900 billion, historically the level where they stop hoarding and start letting the hose run again. QT has a hard end date, December 1st. Reverse repo is basically dry. The emergency reservoir that once held trillions, now down to crumbs. The textbook says that's the moment liquidity starts flowing back into risk assets. And yet today still felt like black ice. Funding slid back into mild positive. Futures open interest is down from the peak, but options open interest, that's where the size lives now. Over 100 billion, near all-time highs. Traders aren't leading on 20 times perp degeneracy. They're hiding inside structured bets, collars, spreads, and gamma games. That's a smarter market, but it's also one where the floor can move faster than you think when those hedges flip. Stables flowed too, not in a cute retail is scared way. In a entities with real balance sheets are changing venues way. Some desks bled out. Others quietly filled up. Wintermute types, GSR types, the predators who don't tweet entries. They report them in quarterly numbers 6 months late. The big picture heat check looks like this. The macro engine is slowly switching from drain to fill. The sentiment gauges are stuck in fear. Leverage already got flushed by that 1.3 billion liquidation chain reaction. And yet price action still feels like everybody's driving with both feet. One on the gas, one hovering over the brake. It's not a clean bowl. It's not full capitulation. It's a market that just discovered the guardrail gives way if you hit it hard enough, and that's when you want to know who's quietly buying the wreckage. All right, let's stop pretending the candles tell the whole story and talk about what actually moved the world today. First thing, the government clown show finally took a breath. 43 days of shutdown, agencies limping, workers in limbo, markets guessing, and then in one move, the House says, okay, we're done, pass the bill. That's it, all the drama. One vote, gone. Let me translate that for normal people. When the government's shut down, money and data clog up. Payments get delayed, contracts stall, big decisions get punted. When they flip it back on, it's like turning the water pressure back up in the whole economy. Stuff that was frozen starts to move again. Now, stack this on top. The Treasury's main wallet, the big government checking account, is refilled to around 900 billion. That's usually where they stop hoarding and start spending again. The Fed already circled December 1st as the day they stop shrinking the balance sheet. That's the end of QT. That means instead of sucking liquidity out of the system, they're basically saying, we're going to chill out now and let things breathe. So in plain English, for months, the system has been running with the handbrake half on. Now, over the next few weeks, that brake starts to come off. And as that happens, the US and China basically agree, okay, let's not blow up the global economy this year. Tariffs dialed down, rare earth chokehold relaxed, some of the nastiest rules put on ice for a year. That's what people mean when they say risk on reflation. I'll break that down simple. Risk on. Markets like stocks and crypto get easier to push up than down. Reflation. Instead of everything tightening and deflating, money and prices start expanding again. Now, while the politicians were patching the hole in the boat, the regulators realized their rule book was printed when phones still had cords. The SEC chair comes out and basically says, look, not every crypto token is the same thing. Some of these things are tied to investment contracts and need special treatment. We're working on exceptions and a real framework. That may sound boring, but here's what it actually means. Until now, big institutions, pension funds, big asset managers have been scared to touch a lot of this stuff because nobody knew the rules. You don't bring billions into a room if you're worried the referee might blow the whistle and send everyone home. Clear rules equals big money can finally walk through the front door instead of sneaking around the back. Then you get this move. Coinbase says they're reincorporating in Texas. That isn't some paperwork shuffle, that's a statement. Texas is basically saying, bring your crypto business here. We want it. We'll fight the feds for it if we have to. So now you've got Delaware, the old boring corporate hub, versus Texas, the let's build a future and piss people off hub. Guess where the fun happens? And while all that's going down, Polymarket partners with Yahoo Finance. Again, sounds nerdy if you don't get it. Here's the real play. Prediction markets used to be a degen niche thing. Will this happen? Yes or no? Place your bets. Now those odds and those markets get pumped directly into a site your uncle uses to check stock quotes. That's visibility, legitimacy, and volume in one move. Election bets, war odds, policy outcomes, all that gets dragged closer to mainstream finance. Now, let's talk Bitcoin, because this is where the moves go from policy to predator. On paper, Bitcoin had a rough day, dropped under 101. People panicked, but under the hood, the setup is disgusting in a good way. Coins sitting on exchanges, lowest in about 7 years. OTC inventory. That's the quiet off-exchange stash big buyers use, is down around 70% from the 2021 peak. Miners pushed over 71,000 BTC to Binance this quarter. Old whales, the OG wallets that haven't moved coins in years, started dumping 1,000 coin chunks. Now, if you're a rookie, that sounds terrifying. Whales are selling, miners dumping, we're doomed. Let me give you the grown man version. They're not just selling into the abyss. They're selling into somebody. At the same time, spot Bitcoin ETFs printed one of their biggest inflow days, around $524 million, and then kept stacking flows for 8 straight sessions. So what's actually happening? Old supply is leaving the hands of miners and OG whales. That supply is being soaked up by ETFs, vehicles used by boomers, funds, pensions, and serious capital. This isn't Bitcoin dying. This is Bitcoin changing landlords. Now Ethereum. That one's funny in a cruel way. Price down around 12% on the month. ETF ETFs showing over 100 million in outflows across 6 days. Everyone on social media chanting, ETH is dead, no one cares, narrative over. And while the crowd is crying, whales quietly buy about $1.37 billion worth of ETH in November. Exchange flows go net negative, meaning more ETH is leaving exchanges than coming in for the first time ever. One whale goes out and buys 75,000 ETH in 12 hours, like it's a Costco run. Let me break that down like we're at a bar. Retail is puking their coins out at the bottom. ETFs are shaking weak hands out. And the biggest wallets in the game are picking up those same coins like they're on clearance. That's what smart accumulation looks like. Then we've got the mid-cap altcoins. While everyone's staring at Bitcoin's faceplant and arguing about ETH, a bunch of mid-sized names start ripping. Lisk up 70% in a day. Firo, Uni, and others pushing big double-digit moves. Alt-season index still only sitting in the low 30s. What does that tell you? It's not full meme mania. It's the early stage, the quiet accumulation before everything gets stupid stage. The part of the movie where only the guys in the back row see what's coming. And now we get to DeFi, which today looked like a crime scene. TVL, total value locked, dropped from around 150 to 130 billion in a week. Why? Balancer got smoked by a bug for over 100 million. CeDeFi bridge got hit. Shibarium ate a flash loan punch. North Korea-linked hackers have ripped over 2 billion in crypto this year. Let me explain that in real talk. Whenever you cross a bridge in crypto, move money from one chain to another, you're trusting a lockbox that might not be as secure as it looks. This week, a bunch of those lockboxes got kicked in. If you're moving big size through bridges right now, you're not a trader. You're a stuntman. Now, zoom out to the old world markets. Tech darlings starting to stall. Utilities and energy ripping higher. Semiconductors roaring like nobody told them about risk. Dark pool data shows big players quietly net selling even as indexes hold up. Credit spreads creeping wider. A Fed regional chief announcing a future retirement in the middle of a Trump-driven Fed reshuffle. It's all sending one message. The surface is calm because the system is buying time. Underneath, smart money is rotating, not relaxing. And above all of this, like a giant shadow over every chart, is AI. Hundreds of billions lighting up new data centers. Cheap Chinese models coming online. GPU shortages stretching into next year. Energy demand going vertical. AI-generated music topping Billboard. Voice marketplaces licensing dead celebrities. Courts fighting over who owns your chats. That's not a sector. That's a new gravity well. So when you put all of today together, here's the simple breakdown for the normal guy watching this on his phone. The government just turned the money hose back toward on. The US and China agreed not to blow up the sandcastle, at least for now. Regulators are finally writing rules that let big money come into crypto without pretending it doesn't exist. ETFs are hoovering up Bitcoin while the crowd panics. Whales are quietly stacking Ethereum while everyone trashes it online. Mid-cap alts are starting to wake up. DeFi is reminding you, not all yield is worth the headache. Stocks are being held up by choreography, not strength. AI is pulling power, chips, bandwidth, and money into a black hole of opportunity and risk. And in the middle of that entire storm, one thing never changes. The real edge is not where the headlines are clean. It's where the order books are dirty. That's why, while all of this was happening, shutdown ending, ETFs buying, whales rotating, AI detonating, XXX was exactly where he always is when things get ugly. Down in the trench, watching the Solana gutter, sorting through the losers list, looking for the zombies that are beaten up but not dead. Because the suits love the big narratives, but the garage, we make our money where the blood actually hits the floor. And that is where we're going next. XXX didn't spend tonight staring at charts from a couch or pacing around his kitchen. He took the storm head on from the Golden Nugget Lake Tahoe, the kind of place that understands risk the same way the Trench does. Downstairs, the new remodel is shiny. The casino floor buzzing, tourists losing money with a smile they'll regret tomorrow. But upstairs, that's where the real game was played. While Bitcoin was falling under 101 and the crowd on X was losing its collective mind, XXX checked into a mountain view room overlooking the dark lake. He spread out his laptop, fired up the real tools, Axiom, GMGN, DexScreener, Birdeye, and started scanning the Solana gutter like a surgeon with a flashlight and no anesthesia. Because this is the part people never understand. The Trench is exactly like a craps table. You push your chips onto the felt. The dice hit right, you double your stack. The dice hit wrong, the dealer sweeps your hard-earned money into the abyss like it was never yours. The Trench plays by the same laws. Brutal, immediate, no refunds. And that's why he uses the tools. The average degen throws money hoping the universe likes them today. XXX reads flow. He watches the liquidity. He checks who's buying, who's selling, who's sniping, who's exiting. He doesn't pray to charts. He interrogates them. Most of the tokens he scanned tonight died instantly. Mint not revoked. LP unlocked. Insider networks everywhere. Volume too thin. Holders too fake. Flow too sloppy. A trench full of corpses wearing cute logos. But two names refused to die. The first was URANUS. Dumb name, serious structure. 26 days old. Over 2 million in liquidity. More than 2.6 million in volume. More than 35,000 holders. Axiom came back clean. GMGN showed stabilization instead of panic. It had every chance to collapse and kept holding the floor like a fighter who already took the hardest punch. It dropped 57% from the highs and still had the strength to breathe. That's rare down here. That's a real survivor. Price needs to hold roughly above 25 cents with steady volume. Greg's 20 with volume dying, it's over. But tonight, it earned its seat at the table. Then there was Pigger, a wild card. Contract clean, LP locked, mint revoked, more than 1 million in daily volume, 5,000 plus holders. But GMGN revealed the landmine, 5 insider clusters holding a chunk of supply. That's the loaded gun on the table. Crash came from insider selling, thin liquidity, retail panic. But after the slap, the wallets calmed down and flow steadied. Risky, not hopeless. Needs to hold around the 4 line with volume staying alive. Loses 3 or insiders, start dumping again. Lights out. A survivor, but the kind that still has blood on its hands. Patriot almost made it but had too few holders. Cole had the numbers, but lit up every red flag on the contract side. Those don't get discussed as options. They get discussed as warnings. So picture the scene. Downstairs, people are throwing chips at felt, hoping for luck. Upstairs, XXX is dissecting tokens with real data and discipline, proving once again that the Trench is not about guessing. It's about patience. It's about flow. It's about filtering 100 losers to find 2 maybes. And everything we walk through here is paper trade only. Demonstration, education, transparency, nothing more. And now that he's dragged those survivors out of the mud and the smoke at the Golden Nugget, there's only one thing left to do. Slow it down. Turn the lights on. Bring in the one member of this garage who never misses the truth in the charts. Lulu's TA. Lulu checked the charts today, and she's keeping it straight with you. The whole market still smells like a bear. I don't care how many little green candles we get. I don't care what influencers scream on their timelines, and I don't care how loud the hopium crowd gets. When you break it down across 3 time frames, the structure is still down, and your girl only trades what's actually in front of her. But even in a bear, the pig can still hunt. I took 2 quick scalps today. One short on Bitcoin around 345 this afternoon, and one little bounce scalp on Ethereum around 418. Nothing crazy. Quick in, quick out. Snatch the bag, leave the circus. This is not the type of market where you get brave and hold anything heavy. This is survival mode with lipstick. Here's what I saw. 3-minute chart first. This is the scalp zone. The moving averages were braiding all day, weaving sideways, no clean trend, no strong direction. That tells you it's chop. But even in chop, timing matters. Around 340, Bitcoin tapped the top of a tiny channel and stalled. My fast MA crossed down, momentum cooled off, so I took the short and banked it clean. Later on Ethereum, price tapped support. The fast MAs curled up, so I took the bounce long and got out quick. That's how you trade a choppy day. Disciplined, sharp. Small size, controlled exits. Now the 1 hour. This is reality. Bitcoin is still living under the full moving average ribbon. Every rally gets smacked down by that declining trend line. Lower highs, lower lows. Textbook bearish structure. Solana is doing the same thing, stuck under the ribbon. Every pop gets sold. Ethereum looks worse. It keeps tagging the underside of the ribbon and rejecting. And ADA? ADA is just sliding around the floor like someone spilled oil on the chart. No strength, no structure, nothing to build on. Now the daily. The truth you can't negotiate with. The daily moving averages are stacked downward across every major coin. Bitcoin is still under the big trend line from early November. Solana hasn't reclaimed its mid-trend. Ethereum is pinned under the daily ribbon with no impulse. ADA is sitting at the bottom of its channel chewing dust. Until the daily flips upward and price actually closes above the moving average ribbon, this market is still a bear, not a wick. Not a little pump, a real daily close. Here's what I'm watching. If Bitcoin can reclaim 104,500 on the 1 hour chart and hold it, then maybe we get a relief move. If it loses 102,000, the slide gets real and the screams get louder. Ethereum needs to reclaim 3420 or it keeps leaking like a broken hose. Solana needs to get back above 153 with volume or it stays trapped. ADA needs to break 55 cents or it keeps dripping like a clogged sink. And if ADA loses 50, oh boy, that's when the real crying starts. Final word, sometimes the best trade is the one you don't take. I took my 2 snacks today, put the profits in my pocket and walked away. Because the lower time frames are trying to fake bullishness, but the higher time frames keep knocking everything down. Until the daily flips and price gets back above the ribbon, Lulu is staying defensive. A bear is a bear even when it buys you a drink. And as always, none of this is financial advice. I'm Lulu, head of TA in the garage, and if you didn't know, I'm literally a pig. So if you're copying my trades without thinking, congratulations. You are officially taking signals from barnyard livestock. We'll see you